Welcome to the second video. We'll be talking about time frames and candlestick patterns on this video. Now, we talked about candlesticks on the last video, so I believe many of you are familiar with what candlesticks are and how they work. Okay, you could tell me what a bullish or a bearish candle looks like after watching that video, and you'll be able to identify a high and a low after going through the first video we have on this series. Now, so let's talk about what time frames are. Now, remember, a candlestick is representing information, price movements for a particular period, for a particular time period. Now, the time period can be a day, it can be an hour, or it can be a minute, a second. Okay, that is how candlesticks work. This is how it operates. It tells you price movements for a particular trading period. Okay, the trading period can be an hour, a minute, 15 minutes, 2 hours, a whole day, a week, or a month. Now, how do candlesticks tells you this information? Now, let's go to the monthly candlestick. Now, if I'm on the monthly time frame now, each candlestick is telling you price movements for a whole month. Now, this month we have Bitcoin. This month we have Bitcoin opening at what price? We have Bitcoin opening at let's say we have Bitcoin opening at 109k and currently at what, 102k. Now, so far this month, remember, this is a bearish candle. This is what a bearish candle looks like. Remember, a bearish candle have the open at a higher price and the close at a lower price. Now, the market is still bearish. The month hasn't closed there. It's still November 7th, or I think 8th. Okay, so the month is yet to close. We might have the market later going back up, pumping maybe at towards the end of the month. Now, but for now, this is a bearish candle. I clearly say. Now, let's just use something way back. Let's use the candle for April. Now, this is a bullish candle. The bullish candle opened at 82k and closed at 94k. Now, this is how a bullish candle looks like on the monthly time frame. Okay, the bullish candle looks like this on the monthly time frame. Now, let's mark this out. This is a monthly time frame. Now, the candlestick now is telling you price movements this month. It's telling you price movements. It's telling you that the market's open at 82k and it's closed at 94k. So the market there was an increase of price. So therefore, that is why we have a bullish candle. Now, during this period, during this month of April, right? Although the market opened at $82,000 and closed at $93,000, there was a particular period when the price dropped to $74,000. That is the lowest point. Remember, we have lows, highs and lows in candles. Now, the low for this is what? The low is basically, okay, this is the low. So now the low is the lowest point the market got to during that particular time frame. Now the high is here. The highest point the market got to during this month was 95k, but it did not close there. It came back to close at 94k. Okay. So now this is the candlestick. Now, if I was to go back to the daily time frame, remember, now let's go to the daily time frame. You could see this is the month of April. Just marking out April, I think, right? Yeah, I believe April or March. So this is the month of March or April. You could see that one stuff we just target. Okay, let's mark out March 1st. And okay, I believe April, this is April. Now this is April 1st, and so April 30th. This is a whole month. Okay, this is the daily time frame. Now, each candle you see now is telling you price movements for a whole day. Remember the monthly time frame. If you go back to the monthly time frame, you will just see how it looks. Okay, look at it here. This is the monthly time frame. You can see how little it looks, right? Let's expand it. Or let's go to the weekly time frame now, so you get to see it. You can see this is the weekly time frame covering how many weeks? 1, 2, 3, 4. It's covering 4 weeks. Okay. So now if you go to the daily time frame, this same section is covering this distance. Now, if you go to maybe a 4 hours time frame, you will see how long. Okay. Now, how long? You can see that same line we just had, this same rectangle we had is covering this much length. Okay. This much candles, this many candles on a lower time frame. Remember now, the time frame you are seeing here, when I say a 4 hours time frame, each candle is telling you price movements for 4 hours. Now, if I come to a daily time frame, each candle is telling you price movements for a whole day. Now, if I come to a 12 hours time frame, each candle is telling you price movements for what? 12 hours. Okay. Basically, this is it. Okay. Now, yeah, this is it. So basically, time frame is nothing mysterious. It is so easy. It's just telling you, okay, if it's a 15 minutes time frame, each candle is telling you what happened in the last 15 minutes. Now, the higher the time frame, the more significant it is. Okay, when you see some particular analysis or some particular patterns, okay, on the higher time frame, it is what's more significant, because the higher time frame is what investors, okay, big investors, institutions use to look at the market. They check the return of what their assets in maybe 24 hours, a week, or a month. Okay. It's so different from a day trader who is trading a 15 minutes time frame. Now, investors are putting their money into BTC, buying BTC, hoping to hold for a month, a year, a week or something. So they are using what the higher time frame, like the daily time frame, to monitor the movements of BTC. They won't likely be on the 15-minute time frame trying to see if Bitcoin is pumping or selling on the 15-minute time frame. They are likely on the higher time frame. So the higher time frame has what more significance than the lower time frame. Okay. Now we're going to talk about some candlesticks patterns that I use. I don't use too much candlestick patterns. I use just a little bit of candlestick pattern. Now, the two types of candlestick patterns I use are what? The engulfing candle. Now, the engulfing candle is a candle where you have a bullish and a bearish candle. Now, when you have a bullish and a bearish candle, now let's say this is how a bullish engulfing looks like. Okay. I won't be using wick for this explanation. So just to get it done. Now, this is how a bearish engulfing looks like. Now, this is a bearish engulfing candle. Bearish engulfing candle. Bearish engulfing candle. Okay, bearish engulfing. Then this is how a bullish engulfing candle looks like. Yes. Okay. So time, not the best, but this is how a bullish engulfing candle looks like. Okay, you have what? Sorry, it's not straight. Okay, yeah. So now a bearish engulfing candle and a bullish engulfing candle. Now, an engulfing candle is a candle where you have the next candle covering what? The high, the low, the body of what? The previous candle. That is what an engulfing candle is. Okay, it is a reversal candlestick pattern. Now, when you spot an engulfing candle on a daily time frame, it usually signify a change in trend. Now, this is an engulfing candle here. We have a bearish engulfing candle. We have a bullish candle, but the bearish candle that formed next engulfed the bullish candle. You could see after this, the market that was pumping on the daily started dumping. It was a change in trend. Okay, bearish, they don't always work, like you think. When you use this stuff, you use them with you don't just use them in isolation. You use them with other market tools, use them with other analysis tools, other stuff you use to analyze. You don't just use this and be like, okay, you have lens engulfing candles, and the next time you see a bullish engulfing, you are going to buy Bitcoin. No, it doesn't work that way. You have to use it with other things in order to analyze this market correctly. Now, the bullish engulfing candle, this is also a bullish engulfing candle, but a little one there. You see there was a bearish candle, then a bullish candle engulfed it. Now, I use the engulfing candle a lot, and another candle I use is just the pin bar or the hammer bar candle. Now, the pin bar or the hammer, it looks like this. It looks like this. Look at it. This is it. This is what we call pin bar, and this is what we call a shooting star. People call it pin bar. Some people call it hammer. Some call it shooting star, evening star. I think so. This candle, okay, it usually indicates rejection. These are the two candlesticks I like seeing. These are the two candlesticks I like using. Now you can see we have one here. You see we have a shooting star here, okay? See, the wick is longer than the body. The wick is way longer than the candlestick body. When it's in form, you see how the market started dumping, okay? So we have another one here. You can see it doesn't matter if the color of the candle doesn't matter for shooting star and hammer. or pin bar. Okay, regardless of the color of the candle, if the wick is long and the body is small, it indicates rejection. So these are another candlesticks I enjoy using. You could see we have one here also. So now these are the candlestick patterns I enjoy seeing. Now you could see when these candlesticks pattern are forming, bearish engulfing, market is bearish. You see the market is moving towards the direction. But when you go on the lower time frame, it won't be giving you that much accuracy because the lower time frame is not as significant as the daily time frame. Okay, so put that into practice. We will see in the next video. This is what you need to know about candlesticks and what's time frame and a little bit of candlestick patterns. There are more than 10 candlestick patterns. You can Google it out there and look at. But I'm not talking about them in details here because we have so much things to talk about, and candlestick patterns won't really help you make money. You just need to understand the anatomy of candlesticks for you to be able to make money in this space. Now, see you in the next video. Don't forget to click on the link on my YouTube bio. That's my Telegram. I drop trading signals and educational materials there. See you guys. Cheers.